Thank you so much. It's great to be here. I have to laugh. Greg, I don't know if Greg is still on, but I used to work for Greg and a long time ago. And I was doing the Forex. And it's interesting because I was teaching Elliott Wave back then. So anyway, how to spot the trend, trading ETFs, tools for savvy traders. I have a totally different presentation from the last presentation that you saw, but I also think it's very valuable if you like looking at patterns and you like looking at patterns, which I show you through the way I use the indicators. Here's the disclaimer. Oh, before I start, how much time do I have? Because I think we started late. Can you just tell me?
Yes, so 40 minutes.
So that is until 20 after, right?
Correct.
20 after? Okay. All right. So this is the 3 different types of pendulums from my book, The Trader's Pendulum, The 10 Habits of Highly Successful Traders. The market pendulum is learning how to ride the market cycles. Like the markets move up, they move down, they move up in trend, they move down in correction, or they move down in trend, they move up in correction. And it's up to us to figure out where the trend is and how to get on the trend, because certainly when you're trading the trend, it's the easiest way to make money. But you have to be able to recognize when we're in an uptrend and when we're in a downtrend. And that can be tricky. So, and the emotional pendulum is about all of our emotional swings that go with our trades. Now, I've been trading for a very long time. I started out as an institutional trader for JP Morgan, trading Forex. And now I trade, I don't trade Forex so much anymore. I trade stocks and options and futures. Okay, so I day trade futures actually. And the financial pendulum is being able to weather the storm. So that's all about making and losing money, obviously, but being able to use money management and trade management so that you keep the profits, the valuable profits that you make. So let's look at the 8-wave market cycle. This is the 8-wave market cycle that I look at. I am an Elliott wave person. I don't count the waves. Personally, I use my indicators, which I'm going to show you how that mimic this 8-wave market cycle. So trading the market swings can create an emotional roller coaster. Understanding the market cycles and timing is crucial for success, and a structured roadmap and simple timing tools can provide clarity and consistency. My background is learning how to trade the markets with an emotional roller coaster ride, because I traded in the 80s and the markets were extremely volatile back then. I mean, that's when they were the most volatile in the Forex markets. And I learned about the market cycles because we hired an Elliott Wave person off the floor of one of the exchanges, and he sat on our trading desk. So I learned all about Elliott Wave analysis, which I use today just by looking at the wavy tunnel, and I'm going to show you that. So when we are in an uptrend, you can typically draw trend lines around the channel lines around the uptrend. And once we get up here, the market is really greedy. Like the market, traders get greedy and they almost forget why they're not supposed to be buying up here. They forget. And that's something that's very, very common. And it's something that we're studying now and working through in another program that I have. Because sometimes our emotions can just hijack us. And this is when the herd mentality kicks in, and we can be right in there with the herd mentality, being optimistic and exuberant and loading up at the top. And then when the market comes down, typically it comes down in a 3-wave cycle. So the first leg down is usually pretty, well, it can be weak or strong. And then we have a pullback of some sort. And this is where traders think, if they're long up here, they think, okay, I have another chance. We're going to make a new high. and we don't. And then we come tumbling down, and down here, the traders that bought up here are fearful, they bail, they're panicked and discouraged. And this is very common. This is what we saw in the indices, which I'm going to show you shortly. We're going to focus on the ETFs today. So the problems traders face, common issues for traders and their consequences, volatility in the markets, consequence, trade impulsively, leading to an emotional roller coaster ride. Timing market entries and exits, consequence, chasing the market and exiting too soon, missing out on potential gains. Achieving consistent profits, consequence, one bad trade can negate a week's worth of profits. Now, one thing in this market volatility, because we've had so much uncertainty, I'm not going to get into the politics or anything, but we've had a lot of uncertainty, and the markets, at least the indices, sold off. So what did we need to do? We needed to reduce our position sizes and be wary of this. I mean, this is very typical. I am a trader's coach, and I trade myself, obviously, and one bad trade can negate a week's worth of profits or even a month's worth of profits. I heard that this week, actually, and speaking to some traders. So other problems, 4, lack of boundaries and rules. And what is the consequence is feeling lost and unstructured, resulting in winging it. Well, we can't wing it. We've got to be determined with our mindset, and we've got to sort of know in advance what we want to do. Otherwise, our mind will just sabotage our trading, will sabotage us. Like, we could be in the middle of an emotional pendulum swing, feeling elated because the markets are going up in those 5 minutes, and then suddenly we forget that we're supposed to be selling at resistance, like that we're close to our sell point. Anyway, number 5, easily influenced. The consequence, lack of independent thinking, following the herd mentality. And then no clear goals. The consequence is lack of direction and measurable success in trading. So we need a structured approach, effective tools, and accountability. That's really very important. And everything that I say to you today is based on my experience. I've been trading for 40 years, over 40 years. Oh my gosh. And yes, I have been. So everything that I teach you, I've experienced myself. Everything, every single emotional swing I've experienced. Yeah. Okay. So what if you had a system? I'm going to introduce the Wavy Tunnel Pro solution. What if you had a system that explained how to understand and trade the market cycles using the market roadmap, and identified where to place trades for optimal entries and exits? And I'll share with you what the system looks like. What if you had simple tools to trade the roadmap effectively, scan for trades, and follow a trade plan to effectively trade the setups? And then what if you had accountability to do what you say you were going to do? Like, this is a nice formula for success, is it not? So here is Warren Buffett, who is a contrarian. Be fearful when others are greedy. Be greedy when others are fearful. So up here is when we need to be fearful, and down here is when we need to be greedy. Is it easy to do? Absolutely not. It's not easy because our mind just sabotages us. Our mind needs to be trained, and we need to be very mindful when we're trading, and deliberate when we're trading. Not into wishing, and not using our intuition so much, because we have to define our setups. All right, so this is the Wavy Tunnel solution. This is the way using these market moving averages, what the 8-wave market cycle looks like. And for me, this is the wave. Okay, this is the 34 EMAs on the high, low, and close. It just gives you a nice supporting band of moving averages, and it's just, I like visual. I just like visual. It's really nice. And these are our proprietary semaphores into, that move into the wave. And this just I do look at the candlestick patterns, I do, but this tells me that we are in an uptrend because the wave is above the tunnel. So this is your 5-wave cycle moving up. This is the wave, this is the tunnel, the 144 and the 169 EMA. And when the wave is cleanly above the tunnel, we're in an uptrend. When we get this purple semaphore, we've got to be wary. I do look at the awesome oscillator for divergence. Okay, and really that's why I use the awesome oscillator. I want to see if the market is running out of steam. So I'm not one of those that looks at this and says, oh, everything's at the top or overbought. No, because we know that if the market is in an uptrend, we're going to stay in that uptrend until we're ready to reverse. You can't look at the stochastics, the oscillators for overbought and oversold. I don't use them that way. I use the awesome oscillator for divergence. But in my system, when we start to trade below this wave, we target below the tunnel. And I'm going to show you a bunch of examples where that's the case. And that's where we are today also with the SPY. I'm going to focus on the SPY today and the other ETFs. So here we go. This is C, this is C. Like this is the market roadmap. The eight wave market cycle, the 8-wave market cycle. I do not count the waves in between using the Wavy Tunnel Pro. So master the market cycles, achieve better timing for trades, engage in rules-based trading, develop independent thinking with clear trading goals. These are all the things that we need to do as traders. And by following the Wavy Tunnel solution, i.e. the 8-wave market cycle, traders can navigate the market challenges with confidence. We need confidence as traders to follow the market map. Let's look at the SPY. Let's start with the weekly. The only time that we had this in recent history, the only time that we had this setup with the 8-wave market cycle on the weekly time frame where we get the purple arrow up here and then price starts to break down below the wave and go to below the tunnel with the gray arrow. That was in 2022. October of 2022 when we reached the bottom. So my gosh, I remember this whole, this whole mess moving down, and for me, it just made so much sense that we were going below here. It made so much sense. Now, and we did. Now let's look at the daily. October 2024, this is a similar pattern where we're trading up in an uptrend, and then we have the ABC correction right below the tunnel. That was in August of 2024. By the way, this pattern is also great for day trading. It's no matter what time frame you're using. I do recommend using 3 time frames. So if you are a position taker, you can look at the weekly and the daily and the 4-hour. You might take your trades on the 4-hour, or you might take your trades on the daily. If you're a swing trader, you can look at the daily, the 4-hour, and the hourly chart. And if you are a day trader, you can look at the hourly and the 15-minute and whatever time frame you're trading on, the 5-minute or the 3-minute. And every time frame follows this 8-wave market cycle as shown by the wavy tunnel structure of these moving averages. I just think it's just beautiful. The markets definitely follow patterns, and Fibonacci is a big part of it, and why these moving average work so beautifully. Let's look at March of 2025. I took this yesterday, okay? Because we've had a massive sell-off, and this is where we are today. I mean, today we have another candle, but this is where we were last night. Now, what do we notice here? We notice that we made a new high with awesome oscillator divergence, and we did come way below the tunnel here, okay? This actually printed, the first time it printed was over here, and then we had a bounce, and then we came down again, and it printed again over here. So it did repaint from this low to this low, okay? So at this point, I thought, okay, maybe now we're ready for a reversal. So let's see what happens. We've had some nice follow through to the upside. So that I'm calling this a temporary bottom. I mean, that I have to do that. Okay. Let's look at the 4-hour just to show you how everything is the markets are fractal, meaning these patterns show up on all the different time frames. If you're trading the 4-hour, yeah, you need to look at the daily chart, make sure that we're in sync, okay? But this is the 4-hour pattern. Beautiful. It's the same pattern. And then even for day trading, okay? Same day trading pattern. But for day trading, this is ES futures. I day trade the futures markets. You want to be doing this. I took this, I forgot when I took this, but you want to be doing this during the day, during the time that you're trading. And here again, we have nice divergence. So this tells us we're probably going to come down to here. Okay, so even if you wanted to take a short from here to here. And since this is on a smaller time frame, it's on a 3-minute time frame. I mean, this could easily, roll over and come down after this. But the patterns, the one trade is from here to here, and then you have to see if this is actually bottoming. You want it to be during the trading day, and you're going to have to wait for confirmation before taking the trade. And here is the NQ. Okay. Let's just summarize this and then we'll move on to the ETFs. This is the Wavy Tunnel Pro indicator suite. We have the moving averages, which I've told you what they were. We have the awesome oscillator, and then we have the semaphores, which really, really work beautifully. I love them. And we have our bungee, which I also love, which I'm not going to talk about, but there are ways to use it, which confirm that we're in an uptrend or a downtrend. So look at number 1 over here. We said that once we break down, we call it the ABC. So this is point C, and this is our breakout 4 trade, our breakout 4. That's what we call this trade. We have 6 trade plans, 6 trade setups. The gray arrow kicks off the trend. Then the blue and red dots keep us into the trend. They keep us into the trend, and they give us an opportunity to take trades into the trend, into the wave. We don't want to be taking the trades up here only to have the market come back into the wave. We can buy breakouts. There's nothing wrong with that, but we have to, we would have to wait. So you can either buy breakouts or you can buy on pullbacks. That's fine. And then the purple arrow shows the end of the swing. And then what happens? We do it all over again. We come down to below the tunnel, and this is point 1 again. So that is the basic setup when we're in a trend move. When we are in a sideways move on whatever the time frame is that you're looking at, we're going to have chop around the tunnel and the wave. We're going to be going like this. And then you have to recognize that we're in a sideways market. So the markets can do 3 things. They can be in an uptrend, they can be in a downtrend, or they can be in a sideways chop fest. And you have to determine what it is by just visually looking at it. So to summarize, by mastering the market roadmap using simple timing tools and applying it across different time frames, traders can enhance their ability to predict market movements and make informed trading decisions. This structure provides a comprehensive view of the benefits of using simple timing tools for trading the SPY ETF across various time frames from intraday to long-term strategies. Now I'm going to show you what I do, how I look at the market sectors. I look at this website, sectorspiders.com/sector tracker. And we see that there are 11 sectors that comprise the S&P 500. And these are them. So what I did was yesterday, is today April 2nd? Yes, yesterday I printed out year-to-date returns. Okay, so last night, at end of close of business, year-to-date returns. So we see that the S&P was down 4.59% year-to-date, but we have some sectors that are really benefiting, okay, like energy. And there are other sectors that are really hurting and pushing this average down, consumer discretionary and technology. Now, this can turn around, but right now that's the lay of the land. So this gives me a good idea of what's going on. And yeah, and it gives you a good idea too. Now, if I go under the S&P and show all of the top performing stocks percent change, there are, even though the S&P is down year to date, look at all these stocks that are actually up. That's because like they're in the outperforming sectors here, most likely, not always, okay? But that's how you can see which stocks are performing well versus the indices, the SPY, which isn't so far this year, okay? But now I'm going to take you, let's look at the individual ETFs. So this is the SPY. We already showed this. It's the same chart that I showed earlier as of close of business yesterday, down 4.59%. Now you would expect that if the indices came down on the wavy tunnel, that maybe every ETF is showing the same pattern. That's not the case. With this is showing us on the SPY that we could be near a bottom. We've really made a nice correction. If we continue to move lower, okay, and we break below these lows, then we have to go to the weekly chart and see the tunnel on the weekly. We're somewhere like in between. So then we would have to go up to the weekly to see what the target is going to be, okay, to see what the target is going to be. And on other platforms, we do have the weekly tunnel, the higher time frame tunnel. It's not on this chart, but we do have the higher time frame tunnel on on our other platforms. So now let's start with the top one, XLC Communication Services, basically flat. So this has been in an uptrend. Oh, and this vertical line is start of the year. So it's basically flat because we made a high and then we came back down into the wave. So until we break down below this wave, this is bullish. For me, we've come right down into support. This is a nice area of support. It's a nice area because if we look left, we see that we had a nice a pivot point right over here, and the wave is also giving support. Okay, so that's communication services. XLY. So XLY mimic consumer discretionary down 11.07%. This looks like the SPY. Okay, this looks like the SPY in terms of the wavy tunnel. And now we need to really break above this area right in here, the wave in the tunnel, if we are going to continue higher. So for now, we have to be cautious. We are at a major level of support down here. So let's just see if we take out this high. And I love 1, 2, 3 reversals also. Let's just see. But we have reached this is the daily, we have reached a level where perhaps we will bottom out, similar to what the SPY looks like. Now XLP, I don't know why I showed the weekly instead of the daily. Up 4% year to date, consumer staples. But look at this weekly. Oh, I didn't put the January, the start of the year. Oh, okay. But look at this. You see how we moved up in such a fashion, and up here when the market is so stretched away from the moving averages, you don't want to be buying. We came back down into the wave, fine, and then we moved back up and we failed to make a new high. So this was very telling that once we took out this low, we were probably going down here. Now we didn't quite make it. We almost made it, but this is on the weekly chart. And then we had a lift off again. So we need to be, as traders, really cognizant of buying at support rather than buying after it's already taken off like this. Energy. Let me see how much time I have. I have about 12 minutes. Okay. Up 9.74%. Well, that's because, oh, I remember giving a presentation at the beginning of the year and saying, we are at support in energy. This is a really, I just remember saying that. Why? Because we had a beautiful retracement right into the tunnel here. And yeah, I remember saying that. And then here we are. Hey, so notice how, if you learn nothing else from my presentation, buying at support is a good thing. You don't want to be buying up here, and you want to make sure that the trend is up. Now, the wave is above the tunnel, but we flattened out. This has definitely flattened out. So we have to be a little bit cautious, and we need this. If we are going to experience another uptrend, then the wave will start to turn upwards. And I don't know if it will or it won't. Okay, XLF financials up 2.94%. Same thing, support into the wave. And this is the start of the year. So it's very interesting because we came down into the wave and then we made a new high and then we sold off. But basically, we're we're still bullish because the wave is trading nicely in trend. And unless we go below this wave, I can't be bearish. This is an uptrend. Unless we break down below this wave, I have to be bullish. But we have to be cognizant of buying at support. Now there are some on our scanner. We do scan for the breakout 4 trades for when price does come here, and that's very interesting because we've had a number of trades setting up during this sell-off, and we've also had a number of stocks that make up the ETFs that are showing this kind of a pattern. Okay. Here's XLV. Oh yeah, I guess I showed weekly from, okay. XLV Healthcare is up 4.19% year to date. This is the January line. And I can remember saying there also, this is another one. I said, well, XLV is at support. And yeah, and then we had some nice weekly candles up. So this is interesting. We sold off. The market is breathing. We moved up. We had some consolidation and some sell-off. This is interesting. We have to see what happens from here. This candle, this is a long red candle. I don't know I don't have it up right now to see what today's price action is doing to this candle. Yeah, I don't know, but maybe the candle is more halfway. So this is interesting. Yeah, I don't know. I mean, either we turn around from here and start to move up, or we come down one more time into this tunnel area and then turn around. Don't know. XLI Industrials up 0.04%. So basically it's flat for the year. And again, we're at the tunnel. So we want to be able to, we want to hold this area. If we break below these lows, then this is the target. But as long as we hold this area, we had a nice 3-wave pullback into the wave, then I see no reason why we can't trade higher. And this is a bullet, this is a bullish, what we want to see for the bulls. Materials, XLB, up 2.57%. So this is the start of the year. Beautiful pullback into the tunnel, and then we moved higher, and now we're back down again. So we're consolidating. This is very typical after we have a sell-off for the market not to run up automatically, but to consolidate and trade sideways. And as long as we hold this area between the wave and the tunnel, we might consolidate for longer. This is what we want to see. So this will be considered a sideways market, and we want to be buying on support, okay, and then maybe taking profits unless we break above this area. Okay, so this looks good also. I mean, the wave is sloped down a little bit. That implies consolidation. And real estate, XLRE, well, this is the start of the year. And I remember real estate was negative for a while, and then we had this nice green candle, engulfing the strong red candle down, and we moved up, and we're consolidating on real estate as well. XLK technology down 10.55%. So I guess I took all the weekly charts. Yeah. So if we start to move up, fine. If not, if we have some kind of sell off again, then I'm anticipating a move down to this tunnel area. Do we have to get there? No, we don't. But if we break below the lows, then yeah, I would say we're going to get there. And technology is weak right now. XLU up 4.44%. Utilities. If we break below this wave, then likely we're going down to the tunnel. If we hold here, and then it's possible that we can start to trade higher. So we also have scans on our trading platforms, and we have great education for what I'm going to be offering you today. I'm going to be offering you to get the indicators for $49 for the first month, and with all kinds of education on the 6 Wavy Tunnel Pro setups. And let me just show you what the scanners look like on our platforms. Okay, we have the price to wave fill the gap is what we discussed today, a move into the wave and then a move into the tunnel. That's the price to wave fill the gap. The breakout 1 trade, the Royal Cross, I'm not going to explain all of these, and the breakout 3 and the breakout 4, because we discussed this. This is when we move down below the tunnel. So the beauty of a scanner is that you can scan for all of these setups and then decide which opportunities you want to take advantage of. So I don't have time to go into any examples or anything, but this is the MT4 scanner. Okay, I'm just going to show you what they are. This is the TradeStation scanner. We have the breakout 4 ready and signal on here, and you can do it on any time frame. And we have trendline break trades as well. NinjaTrader, we do have a scanner. I didn't show it today. And Motive Wave, we have a scanner. This is kind of what it looks like. You can scan for many different things on Motive Wave, and the scanner is very good on Motive Wave. So a success story here. Jody Samuel's Wavy Tunnel Pro based on Elliott Wave theory has helped me tremendously in recognizing the fractal patterns regardless of asset types such as stocks, indices, commodities, forex, and futures. Since taking her program, I have been more conscientious in preserving my liquidity, slowly growing and rebuilding my account, and I have gained tremendous confidence in placing my trades. What sets her strategy apart from other trading schools is the depth and breadth of her experience in the culmination and creation of the Wavy Tunnel Pro tools. The Wavy Tunnel Pro removes trading ambiguity and helps you set up quality trades. In my short time as a trader, I have cut down on my learning curve by decades, and this system has helped me focus more on finding more actionable trades, refining my trading process, and taking profits more often. Thank you, Jody. So the offer, Wavy Tunnel Pro Elite Tool Scanner and Indicator Suite. Exclusive access to our market roadmap and timing tools. Understand how the markets trade in cycles. Again, you have some videos, about 6 videos that I put together for this. Use our proprietary combination of cycle high and low indicators with momentum indicators to warn of market tops and bottoms. Works with stocks, futures, ETFs, Forex, and cryptos. Works for day swing and position trading. Find precise entry points for option strategies. Embrace this suite of professional tools to trade like a pro. What will you get? Monthly subscription of Wavy Tunnel Pro Elite Tool Scanner and Indicators on MT4, NinjaTrader, TradeStation, MotiveWave, or Wealth Charts. The Wealth Charts doesn't have the scanner. It has the indicator suite. Entry and exit signals for day and swing trading, recorded training on the Wavy Tunnel Pro Elite Tool Indicator and Scanner, Discord members channel. And the website is wavytunnelpro.com/elite. That's the website. You will also get a day in the life of a successful Forex trader, a day in the life of a successful stock trader, a 2025 tracking sheet, a Forex trading room 4 times a week for 1 month, London and New York opens, and the recording so you can see how Neil, our master trader trading Forex, uses the system. Weekly interactive NinjaTrader training session with me. So we meet on Mondays. One-on-one coaching session with Jody. So that's what you get. And we're on MetaTrader for TradeStation, NinjaTrader, MotiveWave. That's the indicator suite and scanner. And the indicator suite is on Wealth Charts. So you can try this out for $49 for the first month, and you'll get all the education. It's an exclusive deal for webinar attendees. Limited time offer. Act now. And if you have any questions, please email me at Jody at FX Traders Edge, and I will answer you right back.